Afrida News coming to you from the capital city of Ghana, Accra, where the drums beat for Africa. These news stories are brought to you courtesy of a partnership between Afrida News and Ghana News Agency. Get screened for cervical cancer. Medical officer appeals to women. Women aged 21 years old and above have been advised to undergo a cervical and human papillomavirus (HPV) screening for cervical cancer as early detection saves lives. Dr. Ms. Anita Owusu-Efriye, a medical officer in the oncology unit of the International Maritime Hospital, said most women shy away from cervical cancer screening, using cost as an excuse. She noted that screening is less expensive as compared to the cost of treatment if one fails to undergo screening, which most often leads to early detection and prevention. The worst can happen. Dr. Ms. Owusu-Efriye gave the caution at the second Your Health Our Concern, a Ghana News Agency Tema Regional Office initiative that seeks to set the medium for the propagation of health information to influence personal health choices by improving health literacy. Your Health Our Concern is a public health advocacy platform initiated by the Ghana News Agency Tema Regional Office to explore the parameters of the four approaches to health communication. These are informative, educating, persuasive, and prompting. Dr. Ms. Owusu-Efriye explained that whereas paying for about 500 cedis to get the 2 sets of tests done and subsequently get a vaccination if tested negative to protect themselves, waiting and getting symptoms before reporting to the hospital would attract a series of tests plus treatments which would cost several times more than the screening. Speaking on the female cancers, cervical cancer, she said cervical cancer can be preventable, therefore the need to screen early, adding that all those who report to the hospital with symptoms already have advanced stage of the cancer. All pre-cancer cells detections are seen through screening. The medical officer explained that due to the position of the cervix, which is at the mouth of the womb, and serves as the link between the uterus and the vagina, it is difficult to detect any abnormal happenings there without being screened for it. Tema Oil refinery workers call for participation in Gold for Oil arrangement. The Tema Oil Refinery Workers Union has called on the government to include the refinery in the Gold for Oil program. They said participation in the arrangement would enable the refinery to begin processing of crude and petroleum products at a cheaper cost for Ghanaians. The Toll Workers Union made a call during a meeting to deliberate on the current state of the refinery. The workers at the end of the meeting, which was monitored by the Ghana News Agency, added that the plant had not been operational for some time due to the unavailability of crude. The Toll Workers Union stressed that it was crucial that the government included toll in the deal to allow the refinery to restart operations. The union urged the government to ensure toll was operational to assure the future of workers in the refinery. They disclosed that the union had not been able to successfully negotiate with the toll board of directors on issues affecting the company for the past 5 years. They said the refinery was experiencing a brain drain of technical skilled workers due to the uncertainty. The union indicated that even though workers were due for payment of their provident fund, which was deducted monthly from their salaries, it had not been paid for the past 2 years, and there were also challenges in the payment of their 2 contributions. They therefore called on the management and the board to fast-track the payment of the provident fund to workers who were due. They said the situation had resulted in most of the workers not being able to pay for their award school fees, rent, and cater for other family and personal needs. According to the union, a deal to revamp toll, which involved an investor in March 2022, was cancelled in November 2022. Meanwhile, the staff of toll during the meeting pushed for a declaration of industrial action, including a demonstration when necessary. They said the inability of government to revamp the refinery was a worry of workers as well as petroleum product users. The staff would present a petition to management and the board of the refinery on the issues. African Continental Free Trade Area advisor urges businesses to form cooperatives. Mr. Jacob Jane-Fiedu, a senior advisor, capacity building and stakeholders engagement at the African Continental Free Trade Area, has advised businesses in Techiman in the Bono East region to form cooperatives to enhance their business activities. He said the government must also create an enabling environment for businesses to thrive in the municipality. As one of the largest local markets in the sub-Saharan region, Mr. Jane-Fiedu explained, Techiman remained the hub of economic activities and trade points in the country, hence the need for the government to provide warehouses and processing facilities for traders. Mr. Jane-Fiedu made the call when he addressed the opening session of the Bono East Regional Conference in the implementation of the African Free Trade Area agreement held in Techiman. He said with the formation of cooperatives and associations, the local businesses could easily access financial assistance to expand their operations. The conference was attended by traders, civil society organizations and actors, as well as other stakeholders, aimed at sensitizing the participants of the AfCFTA agreement and policy framework to facilitate smooth implementation of the agreement. A further suit to enlighten them on the processes and procedures for trading within the AfCFTA. Mr. George Padmore Mensah, the Chief Director of the Bono East Regional Coordinating Council, said the Council was ready to collaborate with the AfCFTA to facilitate successful implementation of the agreement in the region. He noted that AfCFTA had huge potential to create a broader and deeper economic integration that would attract investment, reduce poverty, and increase shared property in Africa. The AfCFTA also has the potential to enhance intra-Africa trade by 52%, widen the continent's export earnings by $560 billion, and lift an estimated 3 million people in the continent out of poverty. Mr. Mensah called on all industrial players in the region to strategize and leverage on the agreement to trade with other African countries. He said the region's economic prospects were derived from agricultural production, processing, distribution, and marketing. The Association of Ghana Industry (AGI) has expressed fears that financial institutions may not have enough liquidity to give them loans for their business operation. The situation, they say, may lead to a slowdown of business operations and increased unemployment. The AGI's concern comes as government secures about 83 billion Ghana cedis from financial institutions and individual bondholders in its domestic debt exchange program, aimed at restoring market confidence and economic stability. Mr. Chonam Clients Akpelo, Greater Accra Regional Chairman, AGI, described the DDEP as a necessary evil for Ghana to secure $3 billion International Monetary Fund loan support program. However, Mr. Akpelo, who is an economist, feared that it would be difficult for industries to get access to funds, especially from banks, to support their operations as a result of the DDEP. Speaking to the Ghana News Agency in an interview on Wednesday, Mr. Akpelo asked the government to ensure that confidence in the financial sector was not eroded through the debt restructuring and IMF program. Our fear is that a lot of people may not be willing to save their money at the bank or pursue some of these government bonds because as it stands now, there is little money in the system, and when that happens, confidence in the financial sector will be eroded. The challenge would be that you will have few people sending money to the banks who themselves use depositors and bondholders' money, and they may not be in the position to give loans to industry. That will mean that our industry will begin to sink, he said. Mr. Akpelo noted that It had taken Ghana a very long time to restore confidence in the financial sector, recalling past years when people resorted to keeping their monies at home. For an exceptionally long time, people had to keep their monies at home, and it has taken a lot of work to build our financial system to this level. Our fear for this program is that we may be going back to this situation where all the gains made in the building confidence in the financial system will be eroded. The government must therefore make sure that even under the DDEP and IMF program, it safeguards confidence in the financial sector, he said. Professor Godfred Alufa Bokwin, an economist, institutions and individuals had sacrificed enough to enable the government to secure 83 billion Ghana cedis under the DDEP to help in dealing with the economic difficulties. He said the DDEP means that insurance companies have lost hugely. Individuals who signed up have also lost hugely. As such, the government must also show how commitment in cutting down expenditure further. The government in 2023 budget announced, among other measures, to cut down on the government spending and boost revenue. The reduction of expenditure on appointees, including salary freezes and suspension of housing, utilities and clothing allowances. The measure also included a freeze on new tax waivers for foreign companies and the review of tax exemptions for the free zone, mining, oil and gas companies, as well as hiring freeze for civil and public servants. However, Professor Gbopin said those measures were not enough, suggesting that consideration should also be made in reducing the size of government and the termination of ex gratia payments. Dr. Patrick Esumin, a senior lecturer at the University of Ghana Business School, noted that the amount secured by the government through the DDEP would provide some relief on finances. In terms of government finances, it means that the government gets some breathing space to be able to undertake some of its programs, and will enable the government to get the IMF facility approved. Dr. Esumin also urged the government to be prudent with its expenditure, increase domestic revenue mobilization efforts, and pay more attention to agriculture and manufacturing sectors to change the structure of the economy. IMF happy with Ghana's progress to submit staff level agreement to Executive Board. Kristalina Georgieva, Managing Director, IMF, says she is happy to know that the government of Ghana is making progress on bringing the staff level agreement to the IMF Executive Board for approval. Very pleased to hear authorities are making progress on bringing the staff level agreement to the IMF Executive Board, she said in a tweet on Tuesday, adding that the fund will support Ghana's effort to stabilize the economy and promote an inclusive recovery. Madam Georgieva said this after a meeting with the President, Nana Akufo-Addo, at the ongoing 2023 Munich Security Conference in Germany. Ghana and IMF in December 2020 reached an SLA on the reforms to be supported under a 3-year extended credit facility of about $3 billion, pending the fund's executive board approval for implementation. The 3-year program is aimed at restoring investor confidence and achieving fiscal and debt sustainability, building buffers to strengthen resilience to economic shocks, and further enhance the government's economic recovery and transformation efforts. The executive board approval is subject to creditors' assurance of debt sustainability in addition to fiscal consolidation efforts and other structural reforms. Last Friday, the government completed its DDEP and secured 83 billion Ghana cedis out of a total of 137 billion from its institutional and individual bondholders. The government has also suspended all debt service payments for certain categories of external debt, pending an orderly restructuring to support the debt treatment process. Mr. Ken Ofori-Atta, the Minister of Finance, on Thursday, informed members of Parliament that Ghana had officially asked its bilateral creditors for a debt treatment initiative under the G20 Common Framework. We reiterated the request for expedited treatment under the Common Framework and presented our economic and fiscal outlook as well as the steps undertaken so far with the DDEP, he said. The minister said he was hopeful that commercial creditors would understand the desire to negotiate with its bilateral creditors on softer terms than the ones that the government expects proposing to them. He noted that a speedy process with the bilateral creditors was needed to pave a way for the discussions with private creditors as the government approached China and India to ensure the discussions with the Paris Club was accelerated. He said the debt operations formed part of a broader government response strategy to address the current economic challenges and was complementing such efforts by enhancing domestic mobilization. Mr. Ken Ofriarta said, all these efforts will be greatly enhanced if the Income Tax Amendment Bill, Excise Duty and Excise Tax Stamp Amendment Bills, as well as the Growth and Stability Levy Bill, which are outstanding in this August House, would be prioritized and passed. The COVID-19 pandemic, Russia and Ukraine war, and other domestic challenges worsened economic challenges in Ghana, which the IMF in 2019 described as the fastest growing economy in Africa. As a result, the country experienced rising debts. Ghana's public debt was 103% of gross domestic product in 2022, compared to the debt sustainability limit of 55%, and erosion of buffers, worsening financing conditions, high inflation and exchange rate, and balance of payments pressures. The government is expecting to receive an executive board approval from IMF by the end of March 2023 to implement programs as policies aimed at addressing these challenges and bringing relief to citizens. These news stories were brought to you courtesy of a partnership between AfridaNews and Ghana News Agency.